Jean, this is our question of the day, and basically we're trying to figure out why are real and financial worlds diverging. How difficult is it to actually put that in perspective?
There's one way to look at things, which is there's a disconnect between what's happening to the real world and activity in the economy and what's happening to financial markets. I'm not sure that this is necessarily the right way or the only way to look at this. The markets had moved a huge amount in February and March, anticipating what was like a very significant shock. And we've seen moves that were in line with what we had seen in 2008 during the global financial crisis. Since then, things have been recovering. And I think you can reconcile that by the fact that, the trough in activity, we believe, will be in April in developed economies. And as a result, a lot of the bad news is behind us. And on the back of this, then it creates an environment where, initial big response from markets, adverse response, and then seeing through the trough explains why we've seen some market recoveries. And so I don't think there's a disconnect. Now, there's a question of whether the market is factoring too much of the good news at this stage, which is why we're cautious and neutral. But it's not an issue of disconnect. It's maybe an issue of being maybe too positive on the near-term trajectory.
So are you expecting a correction because of that?
Not a correction. We find it hard to have conviction on directional move in the near term from here, because on the one hand, you've seen a pretty significant rally, so that makes you cautious on the one hand. On the other, there is news flow that's going to come, and as we see more of the economy's ability to restart, I think that's going to create comfort on the ability of activity to globally, move in the right direction. But there's such a high degree of uncertainty around all of these variables that one way or the other, I think it's very difficult to be heroic and take a directional call up or down. That's why we're neutral. We think from a long-term perspective, there's value in risk assets, but it's difficult to say where things are going in the near term.